In this video, we will do problem 4 from the Ames Learning website. I'm in the review course. The numbers should be a little different than the problem you have, but all the concepts are the same. First, Andy Bachsch Accounting is an accounting firm. On January 31st, 2014, the firm had the following data. So we're given the beginning balances of the accounts. And our first step, A, is to record the opening balances in the T accounts. These are the opening balances. Note, we have assets: cash, prepaid insurance, and property, plant, and equipment. Assets are items that the company owns or resources for it to use in business. We also have an account payable. An account payable is a liability or a debt of the company. And the owner's equity, which is what is left over, more or less. Okay, assets minus liabilities equals owner's equity. So let's put in those beginning balances. First, for assets, increases or positive numbers are debits. So our opening balance of cash, $19,000, is put on the left side, or the debit side. Okay. Prepaid insurance is also an asset. That represents insurance that we have paid for in advance but have not used yet. So if you pay your car insurance for a year in advance, for example, right when you pay it, you have 12 months that are prepaid. As each month goes by, you would use 1/12 of the insurance policy. So we are starting with a debit of $8,900. And finally, we have property, plant, and equipment of $27,700. Okay. If we add up those three assets, we get $55,600. Just go. Now let me see if I check. Whoa. Have I added wrong? Yes, because this is supposed to be at the end of the problem. So it shows that I've got a mark 0 out of 1 and it's red. My green numbers are correct. Yay! Now liabilities are what we owe. A positive number is a credit. Debits on the left, credits on the right. Okay. We're balancing all the time, and we've got an opening balance in accounts payable of $8,300. Owner's equity, also the kind of the opposite of an asset, is a credit for an increase, $47,300. So those are our beginning balances, and if we wanted to, we could come down and click check again. Can do this a step at a time, and hopefully we'll see that everything is green. Yay! Okay, now, so those are our beginning balances. Now, during the month of February, the company completed the following transactions, and in Part B, we need to record the transactions for the month of February in the T accounts. So our first transaction, we purchased office equipment on account. First of all, we are increasing an asset, property, plant, and equipment. An increase to an asset is a debit. So we'll go down here to property, plant, and equipment. For transaction number 1, we have a debit or an increase of $700. On account. What does that mean? Well, that means that we didn't pay for it. So we have an asset, but we also have an obligation to pay for it. That is a liability, specifically accounts payable. So I've entered a transaction in the left side, and now I am entering a transaction as a credit. So they always balance. Debits equal credits. Second transaction, we paid the amount owing that was outstanding to a supplier. I like to work with cash, so when I see paid, that means that the amount came out of cash, and that's a minus for our cash account. So I'm going to enter a credit or a decrease of $5,200. That's my credit. I have to have a debit to match that. Well, we started off with $8,300 owing to creditors. Okay, now we've paid off $5,200. A decrease to a liability is a debit. Oh, so for transaction number 2, I'm going to debit $5,200, and I see that I've made a mistake. Okay, that decrease out of cash wasn't for transaction number 1, it was for transaction number 2. So I'm going to go and fix that. If I would have checked, it would have said that was wrong, and it would have been because it was in the wrong place. Item 3, we received cash from customers for services rendered. Okay, so we received cash. That's a plus for cash. So I will debit cash for $5,100. That's an increase. What happens when we have services rendered? Well, that sounds like a sale to me. So I'm going to come down into revenue. Revenue and increase is a credit. We're on transaction 3, and I'm going to put in $5,100. Transaction 4, paid maintenance bill for February with cash. So I am going to minus cash in transaction 4 for $7,300 or $730. That's a credit. And we paid the maintenance bill directly. That's an expense. That's a cost of doing business. So I'm going to scroll down to my expenses. Here's maintenance. Transaction 4, I'm going to increase my expense by $730. Transaction 5, purchased a computer on account, $1,040. Well, that is an increase to an asset, property, plant, and equipment. So I'm going to debit or add to that account, $1,040. On account means we didn't pay for cash. So we are adding to what we owe a supplier. And for transaction 5, I will credit accounts payable for $1,040. So it's real important to get the transactions into the right boxes. Transaction 6, received a bill to be paid in March for advertisements placed in a national newspaper during the month of February. So I got a bill to be paid in March during the month of February. So it's a February expense. I'm going to add to my advertising expense account for transaction number 6, $1,350. This is not going to be paid until March. So I am going to credit my accounts payable or add to accounts payable $1,350 in March. 7. Paid February's salaries with cash, $2,100. Well, I like to do cash first. So if I paid with cash, that reduces my cash, or is a minus or a credit, $2,100. Now my debit will be a cost of business or an expense. So I go down to salaries, transaction 7, $2,100. Transaction 8, withdrew cash for personal use. Again, I do like to start with cash, so we're reducing cash by 3,500. What are we debiting? Well, when an owner takes out money for their personal use, that goes in the owner's drawing account. And we see an increase in the drawings is a debit. So for transaction 8, we put 3,500 in our debit column. Finally, recognized insurance for February, which was previously prepaid. So February we had an insurance expense, cost of doing business, so I am going to debit 1,600 for transaction 9. We didn't pay cash and we didn't set up a liability. We paid this in advance. So I am going to reduce my asset, prepaid insurance, by $1,600. Okay, now I need to figure out my ending balances. So for cash, I have 19,000 plus minus 5,200 plus 5,100 minus 730 minus 2,100 minus 3,500, or an ending balance of 12,570. Prepaid insurance, I have 8,900 minus 1,600, so that is 7,300. Wish I was in class so you could tell me if I make a mistake. Property, plant, and equipment, I started with 27,700. I am adding 700 and adding 1,040, 29,440. Accounts payable, I started with 8,300. I reduced that by 5,200, and then I added 1,040 and added 1,350 for an ending balance of 5,490. So you see, these problems take some time. Owner's equity, we have a credit balance, 47,300. That usually doesn't change until the end of usually a year. Owner's drawing has a debit balance of 3,500. So for assets, I have cash, I have prepaid insurance, and I have property, plant, and equipment. Property, plant, and equipment is 29,440. Prepaid insurance, 7,300. Cash was 12,570. For total assets of 49,310. Total assets. Liabilities, we have accounts payable. Accounts payable was 5,490. Just take a quick glance to make sure it makes sense. 5,490 sounds good. And in our capital accounts, we have owner's equity of 47,300 minus our drawing account. That is a contra account, and it is a reduction of owner's equity minus 3,500. So now if I add this up, I'll cross my fingers here. Nope, I've got a mistake somewhere. Well, where is that mistake? Somewhere. Assets have to be equal to liabilities plus owner's equity. I have a $20 mistake somewhere. Well, where is it? Let's take a look at our check. Going to go way back up to the top. Yikes. Apparently, I can't add. Accounts payable should be, oops. Do this again. 8,300 plus 5,200. No. Minus 5,200. Credits decrease it. Plus 700. Plus 1,040. Plus 1,350. Whoops. 6,190. Now, what else was wrong? My second transaction. I'm going to replace this up over here. Did you get what I'm doing here? This is total liability plus owner's equity. This is total assets. And these two have to be identical. Okay. Transaction number 2 is wrong. Because that 1,040 belonged to transaction 5, not transaction 2. Got to be careful. Let's see what else is wrong. Check. Okay, I got the green light. Well, why didn't my little equation work here? Because I have some things that are still in the income statement. I have to, let's just call this a subtotal. I have to add revenue, and I have to minus my expenses. And I have revenue down here of 5,100. And I have to subtract my expenses. So I'm going to minus 1,350, minus 1,600, minus 2,100, minus 730. So, whoa, did this company make money? Not according to me. Whoops. We have revenue of 5,100, but we have expenses of 5,780. So they lost money of 680. Yikes. So now if I do total liability plus owner's equity, I have my subtotal from up above minus my 680, or 49,310. Hey, they balance. This is good. So my revenue was 5,100. My expenses were 5,780. for a net income or loss of $680. I'm going to check again. I got the green light on everything, but it does tell me marks for this submission are 32 out of 35. So where is the box that I'm missing? Total assets. Here we go. Total assets were $49,310. Total liabilities were $6,190. And owner's equity, I did not add up. It would be my owner's equity, my drawing, minus my 680, total owner's equity, wish you were in class with me holding a calculator. Okay, 43,120. Phew. Check. Okay, marks 35 out of 35. So you see, it took me 23 minutes to work through this problem and talk at the same time. I'd be a little faster if I was just doing it. But it takes time and it takes some practice to understand these. But what we've done is we've recorded transactions and accounts. We have prepared a mini balance sheet here and prepared a mini income statement. And we have determined that assets are equal to liabilities plus owner's equity. So there's quite a bit in this problem. And for a very small business, say a rental property, you could do your accounting like this, probably on a little different setup on a piece of paper, but it's quite possible. Well, I hope this helps you understand the problems that we're doing in Chapter 2.